Dear viewers, this is part 2 on our series on RNOR status. In this part, we are going to talk about what are the advantages and disadvantages that come with RNOR status, what are the tax advantages you will get, and all the things we are going to discuss in this episode. In this episode 2, to bring to you these advantages and disadvantages, we have our guest faculty CA Sriram in our channel. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, in part 1, we talked about what is RNOR status, what are the conditions attached with it. I hope you have already seen this episode. If you have not watched this episode, here in the card section I will give a link to that program, and you please make sure that you watch part 1 as well. To bring to you this part 2, the advantages and disadvantages of RNOR status, we have in our channel today our guest faculty CA Sriram. CA Sriram is partner at Nitin J. Shetty and Company, and he is a practicing chartered accountant. He specializes into direct taxes, and he has a diploma of international taxation to his credit. He represents NRIs in the income tax appeals, as well as he represents the NRIs in the income tax tribunal as well. Welcome to this channel, CA Sriram.
Thank you.
You gave us elaborate introduction of RNOR status, who are eligible for it, what are the conditions that come with it, what is the intention of the government, and all these things you gave the knowledge to the benefit of our viewers in part 1. Now let's discuss what are the advantages a person gets if he is qualified to be an RNOR status. Please let us know what tax benefits an individual gets as an RNOR status holder.
As I explained, RNOR status is a subcategory under a resident. So, normally the tax advantages what a resident has over a non-resident will all be available to RNOR.
Okay.
At the same time, certain tax disadvantages what a resident and ordinary resident, ROR we say, ROR is having certain tax disadvantages.
Okay.
Say for example, a ROR will attract tax on global income. Whatever may be the income earned, whether it is in India or abroad, will attract tax in India.
Okay.
At the same time, in the hands of RNOR, only Indian income, that is the income which has been earned in India, plus the income which has been earned outside India from a business or a profession which is set up and controlled from India,
Okay.
will attract tax.
Okay.
Any other income earned by an RNOR outside India will not attract tax.
Okay.
So, this is the major advantage as far as taxation of income is concerned
Okay.
over an ROR.
Okay.
However, at the same time, certain other advantages which an ordinary resident would get over a non-resident will also be available to a RNOR.
Okay.
Say for example, an NRI senior citizen will get additional slab. An resident individual who is a senior citizen, his tax slab will be 3 lakh rupees.
Okay.
Up to 3 lakh rupees, there is no taxes on him.
Okay. Okay.
If he is a super senior citizen, that is the age above 80 years, for up to the first 5 lakh rupees, there is no tax on that person.
Okay.
However, if such senior citizen or super senior citizen is a non-resident,
Okay.
then his tax slab will be akin to a individual
Okay.
who is a resident but normal resident, not even a senior citizen. That means the tax slab for an individual in India who is not attained the age of 60 years is 2.5 lakh rupees.
Okay.
The same 2.5 lakh rupees will be applicable to senior and super senior citizen who are a non-resident in India.
Okay.
Okay. But a person who is slipping from non-resident status to RNOR status, automatically he will be eligible to claim this tax slab.
Okay.
if he is a senior citizen.
If I understood you correctly, if you are an NRI, you do not have special privilege of an additional tax slab which is applicable to a senior citizen or a super senior citizen.
Correct.
Because you are an NRI.
Correct.
But if you are a resident Indian or if you are an RNOR category individual,
Correct.
then you will get that particular benefit. So you are treated differently.
Differently.
Whereas in NRI, whether irrespective of your age, you fall into the basic slab.
Slab.
Correct? Yeah.
Exactly right, sir.
Right.
So this is the first advantage which an RNOR will get over NRI.
Okay.
This is one thing. Second thing, an NRI earning capital gains, his capital gains will attract tax irrespective of the slabs.
Okay.
At a special rates.
Okay.
He will not get the benefit of slab rate. Say for example, an NRI has earned capital gains from sale of his mutual funds.
Okay.
If it is a equity oriented fund, tax rate is 10 lakhs above rupees 1 lakh.
Okay.
Okay. If it is not an equity oriented fund, say debt fund, then long term capital gain tax is 20%.
Okay.
Okay. However, if it is a short term capital gain tax, 15%.
Okay.
Whatever may be the nature of the fund.
Okay.
So this is the rate of taxes applicable. So if an individual who is a resident in India earning only this kind of income, at that time when his total taxes are calculated at the applicable rates, he will get the benefit of first 2.5 lakhs tax slab.
Okay.
Saying that for the first 2.5 lakhs of income, there will not be any taxes at all.
Okay.
Only income exceeding 2.5 lakhs, he will get taxed.
Okay.
This facility of getting the slab, basic slab exemption against this capital gains is not applicable to non-residents.
Okay. So if I understood you right, what you mean to say is, if there is a capital gains tax in one of your transactions,
Correct.
if you are a resident individual,
Correct.
and you have no other income,
Yeah.
this capital gains tax, the capital gains what you have made in that particular year can be offset against the basic slab.
Yeah.
Whereas if you are an NRI, every bit of capital gains that accrue to you cannot be offset against the basic slab. Is that correct?
Absolutely right.
Right. But when you become an RNOR status, you get this additional benefit of adjusting your capital gains against the basic slab in case if you have no other income in India.
Absolutely right, sir.
Right. Okay.
So this is the second type of advantage.
Okay.
Then apart from this, there are certain other advantages. Say for example, a non-resident, okay, he is a senior citizen, non-resident, not having any business income in India, he is having certain incomes. Okay, since he is a senior citizen, even though his income is above certain amounts, he will be liable to pay advance tax in India.
Okay.
Meaning thereby, in India there is a concept that income earned, you have to pay the tax in the same year.
Yeah.
Okay. However, you have to file the tax returns in the immediately next year.
Yeah. So you have the financial year and assessment year. Yeah.
So income earned in a financial year, tax has to be paid in the same financial year as advance tax and claim the credit of that advance tax against the income tax return when you are filing.
Next year.
Next year.
Okay.
This concept is applicable to non-residents.
Okay.
Okay. This concept is applicable even to residents.
Okay.
However, if a resident is a senior citizen, then on the income what he has earned in India, okay, he will not be required to pay any advance tax. However, if a senior citizen who is a non-resident, he is having certain income in India, even though he is a senior citizen, he will have to pay advance tax in India because his residential status is a non-resident.
Okay.
So, if a person, when he slips from NRI to RNOR status, he will start enjoying this benefit. Say, he need not pay advance tax, that is the tax which on the income what he has earned during a financial year.
Okay.
He can pay that tax as a self-assessment tax when he is filing the return of income.
Right. So if I heard you correctly, and the third advantage that comes with RNOR status is, while filing your tax return or as and when you have an income of that year, you are required to pay advance tax.
Correct.
And this is applicable to NRIs also if you have an income in India.
Correct.
Whereas a resident individual, if he does not have a business income,
Correct.
and he has income by virtue of rentals, interest and other things, if he is a senior citizen, he does not need to pay advance tax. Rather, when he files his returns the following year, that time he can compute his taxes and pay then itself.
Correct.
This is the other advantage which is there for resident individuals, will also accrue for people with RNOR status.
Absolutely right, sir. Absolutely right.
What is the next advantage?
There are few other advantages. A person who is having certain individuals dependent to him, and those individuals are disabled, okay, or a person himself is a disabled. At that time, if such person is a non-resident, he cannot claim certain deductions which are available from taxes in India against whatever the income what he has earned in India.
Okay.
Okay. Certain medical benefits. Okay. He has got certain deductions up to 75,000 or 1 lakh or 1,25,000 straight deductions. If he has a dependent disabled or he himself is a disabled. So these deductions will not be available to a non-resident.
Okay.
But when he slips from NRI to RNOR status or resident and ordinary resident status, he will start getting this additional advantage or deduction from his incomes for these medical benefits, especially.
Right.
So this is the another advantage.
Okay.
And akin to these kind of deductions, there are certain investment opportunities, okay, or say social security wise certain investments an individual can make. Say for example, a person who wants to get an PPF account opened. An NRI cannot open a PPF account, but if he becomes a resident in India, automatically he will get a privilege to open a PPF account.
Okay.
So these are the few other advantages what an RNOR can enjoy.
Right. So NRIs have got that feeling in their mind that they are super citizens, they are treated differently, they get exemptions for everything. In this today's episode, we came to know that it is the resident individuals who have a favorable treatment. When you become an RNOR status, all these extra privileges that come with making extra claims against the income tax exemptions, your eligibility to invest in the government scheme which has special interest rates, all these benefits will be made available to the RNOR status. So RNOR status, in a nutshell to say, is nothing but a resident status with a special exemption that your overseas income will not be taxed. Otherwise, you are perfectly a resident individual. You have all the privileges that a resident citizen enjoys with respect to the taxation. Mr. Sriram, I would like to ask you one more question here. We talked about all the advantages of RNOR status. Does it mean to say that it has no disadvantage at all, or are there something that we have to keep in mind before availing this RNOR status?
The disadvantage, I mean, when there is a pro, there should be a con. So this is a...
It comes in package.
Yes. So there are advantages as well as disadvantages. But when a person who is planning to returning back to India with the intention to stay permanently in India, at that time he will enjoy more of an advantage only.
Okay.
Okay, as being a RNOR status for the first 2 years when in that transition period.
Okay.
So in those circumstances, normally there will not be any disadvantages. However, a person who is not having the intention of getting the back to India permanently, but due to certain other consequential issues, he becomes a RNOR by mistake, what we say. That time it might affect in future when he is coming back to in India permanently. That transition period, whatever 2 years he can get maximum RNOR status,
Okay.
he would have enjoyed earlier only.
Okay.
Okay. So, in that circumstance, he will lose the benefit of being a RNOR for the 2 years. He might become RNOR only for 1 year.
Okay.
So, because this RNOR status is a resident status. Now, the first basic condition, what I mentioned to become a RNOR, when he is permanently coming back to India, states that out of past 10 years, you have to be non-resident at least for 9 years.
Okay.
So, when you become a RNOR in between, due to the third and fourth condition that which has come into force from this financial year, that time, when we go back and check the past 10 years track record, you might be a RNOR here and there for 2-3 years.
Which is a resident individual.
Yes. So, automatically you will lose the advantage of being a RNOR and slip directly to ROR.
Okay.
So, this is the major disadvantage of those people who are coming within the RNOR category during his middle status.
Okay. To say it all, RNOR status is like a lifeline given for taxation purpose.
Correct.
If you prematurely use it by spending more time in India, inadvertently you will be losing this precious lifeline given to you to save on the taxes. If you have used it with your knowledge or without your knowledge, when you return back to India to settle here permanently, instead of being categorized as an RNOR for a period of 2 years, you may be suddenly categorized as an ROR. Please plan your stay in India. Please conduct your tax affairs with due diligence. Talk to the chartered accountant. Make sure the lifeline of RNOR is available to you when you come back to India. Mr. Sriram, NRI community has one another misconception or one another belief. They equate RNOR status for something else. I live in Dubai and everybody says, my clients come to me or people talk to me and they say, when I go back, I have RNOR status for 2 years and because of which my NRI FDs will become tax free. Does RNOR status give tax benefits on the NRI FD? What does the law say in this?
Income Tax Act gives exemption on interest earned from NRIs.
Okay.
It never says
NRI FDs.
NRI FDs or any NRI account, non-resident external accounts.
Which includes FCNR also.
FCNR is a different type of account by itself.
Okay.
So, under the RBI guidelines, there are two categories of accounts which a non-resident can open in India. One is non-resident external and FCNR, which can be used outside India. And one another account is non-resident ordinary account, which can be used in India.
Okay.
This about interest earned from NRE deposits or FCNR deposits will always be exempt in India.
Okay.
That exemption is given. However, the bank account opening or the status of residential status of an individual in India are governed by two laws. One is Income Tax Act,
Okay.
which gives resident ROR, RNOR, NRI status,
Okay.
and another is FEMA, Foreign Exchange Management Act.
Okay.
So, opening an account in the form of NRE, NRO or FCNR by a resident outside India or an NRI, I would say, is as per the law of residents under FEMA Act.
Okay.
It has got nothing to do with what is your residential status under Income Tax Act.
Okay.
Under FEMA, what it says is that 182 days rules is there.
Okay.
Apart from that, there are certain other rules also, which says that if your intention is to coming back to India permanently for settlement, or you are coming back to India on employment, or you are coming back to India for a purpose of settling a business or vocation in India.
Okay.
So at that time, irrespective of number of days you stayed in India, you become a resident in India under FEMA.
Okay.
So once you become a resident under FEMA, you are not supposed to maintain NRE accounts.
So FEMA says your NRI status depends on your intention and not on the number of days.
There are both the conditions.
Okay.
However, the first condition has to be satisfied, 182 days conditions.
Okay.
However, there are certain other conditions which are overriding effect on this number of days stay.
Okay.
Okay. So these are the three conditions what I just said, that if an individual is coming back to in India for permanent settlement,
Okay.
or a person is coming back to India to get an employment here, or a person coming back to India to settle a business or vocation in India. So those individuals has certain intention of earning income or settling down in India. If these three conditions are satisfied,
Huh.
when a person comes back to India,
Huh.
automatically they become a resident in India under FEMA Act.
Okay.
And RBI says, once you become a resident in India under FEMA Act, automatically you have to close down your NRI FDs.
Okay.
So this is what the law says.
Okay.
So when you convert your NRI FDs into Indian accounts,
Okay.
automatically interest has to be taxed.
It is taxable.
Yes.
So
it is.
RNOR status will not say anything about this particular thing. You have no protection because of an RNOR status that the interest that you derive from this converted NRE FD into resident FDs will become tax free.
Nothing to do with that, sir. I can give you another example.
Okay.
A person who has come back to India and stayed in India for more than 182 days.
Okay.
He will become automatically a resident under Income Tax Act.
Correct.
And due to his past records, he might be categorized as RNOR.
Okay. Yes.
Okay, under the Income Tax Act.
Correct.
Automatically under FEMA, he will become a resident, but he has got the intention always to go back and settle down his other business and settle abroad only.
Okay. Right.
Okay, due to certain circumstantial things, his stay in India has exceeded 182 days.
Okay.
Okay, he has got certain business outside India. His visit just extended. That's it.
Okay.
Okay. At that time, he will not be a resident in India under FEMA.
Okay.
Okay, because he has already been a person outside India.
Okay. Right.
At that time, he can continue to maintain his NRI FDs.
Okay.
Even under Income Tax Act, he is a RNOR. Okay, but under FEMA, he will be a resident and resident outside India.
Okay.
That's why he can continue to maintain NRI FDs.
Okay.
At that time, those interest earned from such NRI FDs will get exemption in India.
Okay.
So it has got nothing to do with your residential status under the Income Tax Act about taxation of NRE interest.
Yeah. So if I summarize this discussion, an individual can be categorized as a resident or as an RNOR under the Income Tax Act. Simultaneously, he can be a non-resident under the FEMA law.
Absolutely.
You can hold your NRE FDs or NRE accounts as long as you are an NRI under the FEMA law.
Correct.
If you are an NRI as per the FEMA law, the interest that accrues on NRI FD will be tax free in India, even though Income Tax Department may categorize you as a resident individual or as an RNOR status. But once you lose your NRI status as per the FEMA law, these FDs have to be recategorized as the resident FDs, and the interest that you derive from these FDs will become your resident income and subject for taxation in India. This is the misconception which is there in the minds of the NRIs. You should come out of this misconception and be cognizant of the tax liability that comes to you when you return back to India. Dear viewers, till now we have brought all the details of RNOR status that you need to know. We have made an honest attempt to demystify some of the doubts that were there in your minds as well with respect to NRE FDs and how it becomes tax free in India, under what condition it becomes taxable also. If you have tax queries, CA Sriram can be reached on the email ID which we are showing here on the screens. I am also providing his contact details here in the description box below. Dear viewers, if you think the topic that we discussed today helped you understand the complicated law with respect to NRIs, please like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I will be back with you with one another topic very soon.
Press the bell icon for more details and subscribe our channel.